Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then. Independent investment advisor Sharmila Joshi and Sameer Kalra of Target Investing join me on the show. Thank you to both for joining me on the show. Today on Hot Money, we'll discuss stocks like Quess Corp, Radico Khaitan, the Aviation Pact and IRB Infra. Let's start with the first one, and that is Quess Corp. The stock has been doing extremely well, trading close to the fresh lifetime high. Yesterday, it did manage to hit. Today, trading slightly weak, but nevertheless trading at record highs. What we're asking is that, is the rally likely to continue on Quess Corp? That's what we're asking. Sameer, you have a minute, your view on Quess Corp?
So I think the rally will continue given the improvement on revenue and profit margin on quarter-on-quarter and YOY. So if the results prove another improvement this quarter as well, so I think the rally will continue. Second, the trigger is the demerger of Thomson Cook Human Resources getting merged into Quess Corp. So over there, the shareholding pattern and the shares which are for 10,000 of Thomas Cook will give you 1899 of Quess Corp. That is giving a 20 to 25% premium to Quess Corp. So I think that will help out another rally to continue. So on these 2 points, I think the rally will continue.
Okay, Sharmila, do you agree or do you have a different point of view on Quess Corp?
While I agree that the results are good, I mean, definitely there seems to, the results would warrant attention, but I think that the stock has seen a run up. And I think precisely that point that I think a lot of the positives are in the price now because of this Thomas Cook HR deal is known to the market. So we saw some amount of action because of that. And we've seen some amount of rally because of the fact that good numbers were expected. But I think now the numbers are in, and I don't really think that the stock can, in the near term at least, do more than a 1200, 1300 kind of a level. So I don't think, I mean, not even 13, let's say 1200. So I don't think that this rally is really going to continue in Quess Corp. I think the only caveat here would be if we really see a restart of a mid-cap rally, which I don't again see happening. So I think both things combined, the fact that overall mid-cap seem to be taking some amount of selling, and the fact that valuations seem pretty high for Quess Corp, I wouldn't think that the rally will continue.
Okay, so we've got contradicting views here. Sharmila, I'll start with you. Obviously, valuations are expensive this year, 50 times, 40 times next year. What would be a reasonable valuation on level that if someone wants to get into Quess Corp? But fundamentally, do you have any issues with the company, or is just that the valuation and it's run up too much?
Just that.
The business model is fine according to you.
I mean, yes, I mean, largely I think it, in that sense, it ticks all the boxes. It's just that, some of these mid-caps, and again with good reason, because of the fact that market sort of had a sense that numbers here are going to be decent, and the fact that you had this whole Thomas Cook HR deal, which is being spoken about for so long. We've seen somebody else in the HR space, which is Team Lease, again, moving from higher level to higher level. So from that perspective, I think that you already saw some amount of buying in the stock. So I think about if you're looking at the stock at about an 1100 level, my guess is you should try to get into it about at least 200-300 rupees cheaper. And as I said, my like a 1 year target on the stock would be closer to 1200.
Very quickly, Sameer, what about margins? They've been stable at this 5 to 6 level. Is there any margin improvement that would come in?
So I think what their model, as far as I understood, is their gross margin becomes, or their EBIT margin becomes their gross margin in a certain sense. What they try to turn on is how much can we give the employees, give the expenses, and how much can we gain, and we want to keep a 5 to 6% margin on the costs. So they are running on the cost plus model, which I think they want to maintain, and they don't want to. So I think the absolute number might see a good growth, but the margin expansion will come out really.
Okay, so that's the view that's coming in. Two contradictory views coming in on Quess Corp. The next stock we want to talk about is Radico Khaitan. Came out with a decent set of numbers yesterday, but the counter has corrected ever since. It's down 5% yesterday. It's down another 3% in trade. So what we're asking is this a blip, a buying opportunity for the counter? Sharmila, will you buy on this fall on Radico Khaitan?
No, I'd again wait for a little while more. Two reasons. One is again the fact that just to reiterate what I said earlier, we are seeing a bit of a correction in mid caps. I think that's likely to continue. So you will get good stocks cheaper. And secondly, I think when it comes to this business, alcohol business, you have seen some amount of legislation change in terms of taxes, etc. So what you also need to make sure is that the kind of results that we saw from Radico Khaitan, will that momentum sort of continue? Because if it is only because of the fact that the tax structure has changed, then maybe you can wait for an even bigger correction. But if this thing is like, you know, if they can deliver these kind of results next quarter as well, then I think it will become established that it's a stock that one can look at. So I would really just wait for one more.
Okay, wait for a correction. What about you, Samir? Will you buy?
So I won't buy here because what has happened is the molasses prices which came down because of the sugar prices being drastically down, that has played its part, I think, until unless it shows a further drastic fall. So it's like a 40 to 45% kind of a drop from the peak past 2 quarters. So that has played down. That's why you didn't see the improvement in quarter-on-quarter results. That's why somewhere people who were expecting a quarter-on-quarter saw that moment to get out and put a stock 6 or 7% down after the results. So YOY trend for next 2 quarters will remain, but I think it's more important to see on quarter-on-quarter, which I think will be very difficult to track until unless you really know where the sugar prices are headed.
Okay, so that's the view. I think people are waiting for a correction that could come in. Samir, very quickly, is this applicable only to Radico or the entire alcohol space?
So it's applicable to all the alcohol spaces, because what is happening, the volume growth is hardly there in the smaller ones. The plus point everyone is trying to take out is on the raw material prices going down drastically. Now the volume growth has only come in USL, and that has been consistent for now because they faced a lot of supply chain issues in last 2.5 years. So I think only that space is there, but that also I'll still hold on to, because for this industry, I think quarter-on-quarter is more important than YOY.
Okay, so that's the view that's coming in on Radico. We'll move on to the next stock, and this will be interesting because is the aviation pack that we are talking on. Most of the counters have corrected significantly. Yesterday, Jet as well as Indigo were down anywhere between 10 to 15%. SpiceJet was down almost 8%. Today also the weakness is being seen in most of the counters. Is the correction overdone is a big question that we're asking. Samir, I'll start with you. Overdone correction, and if you would buy, which one would you buy?
So I don't think so it's overdone. We were already expecting the crude to hit around 80. It's already around 75. So we've again internally raised it to 85, 90. Now the only point is if that goes 80 to 85, there'll be another hit coming in next quarter. And especially if you see Indigo and Jet, if you separate all three, Indigo and Jet have separate on their own issues. Indigo was hard hit by the bringing down of the airplanes as well, which people expected not to happen, but it actually did. Jet has its own operational cost issue. So I think Spice is a space which we like.
SpiceJet is something that... Okay, what about you, Sharmila? Aviation, are the correction overdone, and if which one do you like? If you like the aviation space, which one would you select?
I actually don't like this space because, you know, I think that just to go a little bit like into it historically, when the stock started rallying, first of all, they were at much lower levels. You had SpiceJet available in double digits, and that to lower double digits. And the fact that, you know, crude was at a lower price, and you had one player which was out of the picture, Kingfisher out of the picture. So you had suddenly business getting, you know, divided between the 4 larger players that were left, and you were seeing a good, I mean, which I think that trend continues, that more and more people are taking to flying. So you saw the valuations improve. So there was a case to be made at that point in time. But now I think that because the way crude is correcting, if your biggest cost is going to go up, and it is now becoming evident in the numbers, and if the overall, you know, general expectation is that crude prices will continue to go higher even from these levels, then I don't think there's really a case to be made, you know, because now you still have valuations here and you have profitability coming down. So some middle ground needs to be found, and I don't think they're there yet. Okay, so that's the view that's coming in on the aviation stock. I'll start with you. So is this for someone, do you think that there could be more correction that would come in, or if someone's on the F&O side, would you recommend shorting these counters because you see significant downside? See, now F&O is very difficult to play, you know, very honestly, because I don't know what are really the open positions there, etc. But I think logically what I think is that there's some valuation rationalization has to happen from these levels, because you are seeing crude going up. That is a reality. And if that's your biggest, I mean, it was evident in the kind of numbers that Interglobe gave. And I completely agree, you know, all three of them have their own separate issues, which we haven't dealt with really. You know, like a lot of analysts were not happy with the way the management answered questions. Jet has its own set of issues. And so does SpiceJet. They did have like a track record of whatever delays, etc., performance-led related issues, which I don't think have been completely addressed. So I don't think that, and new players have entered the market. So I don't think there is a case really to be made for aviation as a sector.
Okay, Samir, you said that you don't like Jet and Indigo, and out of the three, you would prefer SpiceJet. It's simply because of rejecting the other two, or is there some merit in investing in Spice?
So we invested in SpiceJet, as Shamila mentioned, in lower 2 digits. The reason being this aviation market is growing like 20-30%. But what is happening is Indigo is already done with the capping of the market share. It's already achieved the valuations and everything else. Spice always had that room of improvement, which they catch up on. Their fleet growth has almost 30-40% kind of fleet growth with a 90% occupancy increase, right? That helps you out to subsidize the crude increase. And I'm more interested in Spice doing really well in the Udan phase 1, which people are not looking at, but they are doing it without any subsidy this time. So they are generating a good amount of cash flow over there, having monopolies in certain areas and with a high traffic now, which we track on. So I think Spice will have the edge over the Udan phase and will help the cash flow generation.
Okay, so that's the view that's coming in on aviation. Overall, the view on the aviation space at this point of time seems to be of a slight caution at this point of time. Shamila doesn't like any of the aviation stock. Samir, out of the three, would say that SpiceJet is the one that.
Can I just add? I think the only interesting thing that could come out of this whole thing with what is happening with Interglobe and change of management is that perhaps it could put a spin on Air India, because we haven't had any buyers for it. And the earlier, prior to this, Interglobe had always stated that this is something they don't want. But maybe with a new head in place, the view could change, and maybe you could find a buyer there.
Okay.
So I think that could put a spin sort of on the whole sector. If you start talking about that, what valuation it gets done at, etc., etc., the clauses that will go along with it. But other than that, I don't really think there is much to recommend. And the other thing, to refer to our earlier stock, if I may. Like just as we're talking of that crude is in a spot, so you shouldn't be looking at any of the sectors which have this as a sort of a as a cost. I think the opposite is also true for sugar. If prices are going down, there has been a case to be made for a lot of companies which benefit if sugar prices go down.
Okay.
We are currently only focusing on sugar stocks and saying that results are bad, so you shouldn't buy those. But precisely, I think if molasses go down, or like for instance, we've seen Varun beverages, the results become better there. So that could be another way of looking at stocks.
Okay, so that's the view that's coming in, and the final stock is IRB. We have a management waiting, so I'll just come up for your opening statements on IRB. So numbers were decent. The counter has rallied significantly. The management gave a guidance of 10,000 crore top line, 20,000 crore bottom line in the same year. So the management gave an extremely optimistic commentary on Bloomberg Quint. But is this the right time to accumulate? No doubt the company has had a stellar rally of late. So what's the view on IRB? Will you accumulate post the numbers in the management commentary? Samir, your view?
So I don't think so I'll capitalize on that opportunity because two things over here. The debt is too high right now to even take new orders and execute properly. The other thing is the margins have come down from a 56 level to a 47 on a better execution. So I think the incremental contracts which they are gaining is on a lower margins.
Okay.
So which will affect the estimations and the valuation itself. So I think I'd rather avoid right now.
Okay, avoid. That's the view that's coming in. And your view on IRB Infra?
I would agree. I think that yes, results were decent, but the breakup between that, because they've transferred a lot of this to InvITs. How that breakup works is again, something you don't know. And very honestly, within that space, I prefer other names. Though I do think that road building is a good space to be in, considering that we are getting into election year. So electrification, road building, these are the obvious sort of, things that you can showcase. But I would prefer like an NCC or, some of the other names in the road construction space over IRB.
Okay, so that's the view that's coming in on IRB. In fact, at this point of time, it's a clear avoid from both of our guests at this point of time. With that, we'll have to wrap up on hot money. Thank you so much, Shamila, for joining me. Thank you so much, Samir, for joining me. We have a management waiting with us. A one-time gain of 2870 crores in the fourth quarter helped Vedanta post a 80% jump in its bottom line. We are joined now by Kuldeep Kaura, CEO of the company, to take us through the earnings fine print and to give his outlook for the next quarter. We are also joined by Nikki Mirchandani, our research team from our research research team who's tracking the counter. Nikki, take it away.
Thank you, Darshan. Hello and welcome to Bloomberg Quint, Mr. Kaura. The first question that I have for you pertains to the copper smelter. I'd like to understand what's the status there and when can we expect some resolution on it, since it's a while that the operations at Tuticorin have been halted.
So there were some clarifications sought by the environment authorities in this process of renewal of our consent to operate, and these have been furnished, and we are engaging with the relevant authorities, and we expect that this should get resolved fairly soon.
Well, Mr. Kuldeep, the few questions that I have for you pertains to your aluminium division. Do you see some volatility in that business going forward, given the sanctions that have come in from US? Also, it's proving to be double whammy of sorts, where on one hand, double-edged sword for that matter, it has led to a higher aluminium prices on one side, which is benefiting the company, but on the other hand, it is also leading to the higher raw material prices. Can we expect some moderation in that business going forward?
As I was mentioning earlier, you're very right that because of these sanctions which US has imposed on Russia and the current also halting of production at Alunorte, I mean, there is a huge volatility in the market impacting prices of aluminium on the one hand, which is our top line, which is a good factor, but also I mean, increase in our input costs via alumina prices. But our focus really is that we should continue to improve what is within our control, and 2-3 things will happen. One is we have an alumina refinery which produced 1 million, little over 1 million tons last year. This refinery will be ramped up this year and will produce close to 1.7 million tons. So what it means is that additional production, we will substitute imports. We need not import a high-cost alumina. So this will be one positive factor. Plus, in this refinery, we will also feed substantial amounts of bauxite, high-quality bauxite, from Orissa itself, which also has a lower cost because of the logistics distances. And in addition, in our smelters, we are in a position to further improve our power plant efficiencies, also improve our coal materialization with the mines. And all these factors actually should give us a kind of headroom of about $150 per ton in the cost. And hopefully, if the situation on the, alumina resolves, so that will be additional benefit to these numbers.
Right, at the cost of repeating myself, I'd like to understand the cost of production, if that's expected to increase for our aluminium division, because for FY18 it has turned out to be higher than the one that you've guided. It's coming at $2,000 per ton as compared to $1,725 per ton for FY19. If you could just talk us about that.
No, FY19, as I said, cost of production will reduce from FY18. And we're certainly targeting a cost reduction of about $150 per ton because of our efforts where the outside factors actually don't matter, which is very much within our control. And in addition to this, for overall value creation, we are also working on improving our premiums or the sales realizations. So what we will do this year is that our value-added products, now we'll produce about 2 million tons of aluminium. So we are going to improve our value-added products percentage. We sell upwards of 1 million ton plus value-added products this year. We will. And that will also give us maybe $40–50 per ton additional revenue. So I think these are all the areas where we can make improvements, and we are very focused and working on those.
All right, on to your Zinc International business. What explains the higher cost of production for Zinc International business at $1,976 per ton against the guidance of around $1,700 per ton for the year?
Yeah, okay. So let me put a color on that. You see, the cost in the Zinc International business increased because this in our Scorpion operations in Namibia, we are developing a new mine which there's a lot of pre-stripping to be done. And so pre-stripping, about half of it was done last year, and the balance will happen during this year. So those pre-stripping costs, which are one-time costs, they get added to our cost of production as an accounting process, and that kind of reflects in the overall unit cost of production. Whereas going forward, our new mine, which will come into operation, which is Hemsberg mine, and which will also substantially add to the volume, that as I was explaining earlier, that operation is a sub $1,000 per ton operation. So that's very attractive cost. And plus our BMM mine is also at the similar level of this thing. So going forward, our overall cost of production will improve actually substantially.
Well, the last question that I have for you relates to your iron ore business. Not a good show there. Sales have declined from 800 KT in Q3 as compared to 300 KT that we've seen in this quarter. Are we expecting further kind of deceleration, and also what explains this kind of decline that we've seen in iron ore business?
You see, in the iron ore business, as you are aware, in the Karnataka, the AC limits have been improved last year from 30 million tons to 36 million tons. And we have also improvement in our share. So this year, you will have improvement in volume from Karnataka, which will take our share to maybe around 5-6 million tons there. And plus in the Goa, I mean, this stop in mining, which was a very unfortunate thing to happen. Hopefully, this should get resolved soon. And then, of course, you know, the volumes from Goa will supplement our overall iron ore business.
All right, Mr. Kaura, thank you so much for your time. It was indeed a pleasure talking to you as always. With this, it's a wrap on Hot Money. Coming up next is Ask PQ.